The sudden turn of events in US-China trade talk has flipped the global market sentiment yet again. Only about a fortnight ago, the Federal Reserve had noted that the international growth headwinds have faded considering the optimism on the trade front. However, things are not as rosy right now. Let's do a three-point analysis of the concerns around trade and tariff and what does it mean for India. 1. What are the implications of dwindling trade talks between the US and China? Well, there are signs that may pose as a challenge for Chinese growth recovery in the external sector. Now, it could have a negative rub-off effect on its domestic economy as well, which posted better than expected GDP numbers for Q1 CY19. Now, the IMF had earlier modestly upgraded growth outlook for China this year. While the key global risk of a disorderly Brexit has dissipated, trade war can act as a wrecker in chief for the global fragile growth, including Europe. 2. What could be the way forward now? So we may see more attempts from the central banks to keep an accommodative stance. The Fed in particular has more reasons other than inflation to stay put on the policy rates. But there seems to be a higher probability of a rate cut this year. A scenario of moderate growth means softer commodity prices and lower inflationary pressure for a commodity importer like India. Now, in a scenario of growth moderation and not recession, institutional money may make its way to select emerging markets where the domestic money economy is on the mend. 3. Does India stand to benefit in any way? Well, the ongoing tariff tug-of-war builds a strong long-term case for India's manufacturing. Indian manufacturing and R&D prowess in auto, pharma and chemicals has actually prompted global MNCs to either set up a base here or partner with local firms. Now, China's pollution control drive and also labor cost dynamics have brought in a level playing field vis-a-vis India. Now, higher tariff barriers are further extending this scope of business, and this is getting reflected in the rising exports as well. Now, business opportunity for Indian firms in the US is also expanding. The trade spat has actually come as a blessing in disguise for pharma and chemical manufacturers like Nosil, Aarti Industries, SRF, Navin Fluorine and Rain Industries. Having said that, there is a word of caution. As the trade situation aggravates, there is a possibility of an increase in Chinese dumping into India. Nevertheless, the key positive takeaway is that Indian manufacturing companies have used this breather to sharpen the product portfolio, investing in value-added products and going in for more overseas collaborations.